Tyler's just lucky that he forgets that I have access to the controls too. And I could have switched to him dancing before this, and he could have been on screen instead. But I think he knows that I'd mess it up anyway, and I wouldn't have the ability to put it on
Yeah,
camera.
you wouldn't be able to get back.
Yeah, exactly. I'd mess up the whole stream. Welcome to Pirates of Finance. We are actually live at 3 o'clock Eastern, noon Pacific, on a Friday, no less. We act without. Oh, well,
Hold
I
off
was
the
going to say no
impossible.
technical I don't want to say no technical difficulty because watch, my internet will go out again. You've got a new camera, so we're working on that. Hopefully that works well and we don't have any more of those glitches. Nothing we say is an investment advice. You should seek out your own investing professional. And, hopefully this is for entertainment purposes. Hopefully we do entertain you. But otherwise, nothing we say can be taken as any sort of investment advice. This is two guys in pirate sweaters just talking nonsense on a Friday.
As you say that, I feel a little disheartened. I went down a rabbit hole last night. It was an embarrassing TikTok rabbit hole, but there is this, I sent it to you, this TikToker called Schwinnebago. First of all, sweet handle, yeah. Schwinnebago. But he's a marketing professional, and he was talking about all these direct-to-consumer marketing brands, and he was doing evaluations of all their products and websites and how they're communicating with their copy and their color scheme and blah, 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 blah. And I was thinking to myself, what a luxury that freedom would be to just innovate and try and say things and not in every goddamn sentence have to say, we seek, we attempt, we try, we hope. Not to but begin every podcast with a 30-second disclaimer. What a world that would be. And I know that's like the Willy Wonka world of financial regulation, but man, oh man.
There's nothing I enjoy more than when I'm creating pitch decks and tear sheets, and then we have to go back over and change it all for passive language.
Yeah, I was just talking to a woman who leads up marketing for an ETF firm, and she spent her prior 20 years of her career in a very different part of the world, still doing marketing, but nothing related to finance. And she's been in this position for about a month, and she's like, the amount of copy that I have to throw away because the compliance team just says no. She's like, you can't say anything succinctly. You can't say anything affirmative. It's just the number of hedge words that become part of your vocabulary. I've struggled personally to just not have them in my day-to-day conversations. I find myself at parties seeking and trying and attempting to do a lot of things.
Oh, man. Well, along those lines, first of all, come on. If you know anything, we have a very systemized process to the show, and we have very tight segments. And one of those segments is we do not talk about finance for at least the first 30 minutes.
Right.
And so far, we've used the word finance like 6 times, in the first 5 minutes here. But part of that, what you remind me of is the other thing I was thinking about, the technical difficulties that I'm looking at. You may have a new camera, but for some reason our lighting is completely off. And I got to maybe try to fix that eventually, because I just look completely blown out. And you would think, I was hoping that by you moving to Florida, we would be on, me in California, you in Florida, we've had all this sunshine in the background. So we'd be well lit. But apparently you're, podcasting from your Hobbit cave.
Yeah, I decided to podcast from the side of the house that has 0 sunlight.
But also the reason I bring up the lighting in California, because of what you're saying about how it's changed your everyday speech, it reminded me of I have a few friends out here. I try not to have, many friends in general, but the friends I do have out here, I always say I can't trust what they say, because everybody out here is in hospitality, right? They run wineries, they do all these tastings for all the tourists that come out. And we just had, family and friends here for the Thanksgiving holidays, and people are like, everybody's so nice here. And I'm like, really? Were they pouring you wine? Yes, of course they were. And so my friends out here, what I always say is they've been doing hospitality for so many decades now that it's almost like they don't have a personality left. Right. It's you kind of all the rough edges have been sandpapered down, and all of their opinions or everything been sandpapered away. And all they do is have these very pleasing personalities that are just trying to have people enjoy their day, drink wine, and enjoy this beautiful weather.
One of my best friends from college was a hospitality major at Cornell's hotel school. One of the best hotel schools in the world. I didn't even know there were hotel schools before going to Cornell, but I guess that's a thing. Anyway, people go there to learn the hospitality industry. He is now a very senior manager of a very well-known hotel in Miami. And watching him work, to your point, is hilarious. Because this is the same guy who I would find drinking in a basement in a frat, right? In his sweatpants that he hadn't changed for 3 weeks. And then to see him in like the most immaculate suit and tie, dealing with these high-end clients with very tight, straight posture and shoulders. And I mean, it is like night and day. And then they'll turn the corner and I'll just be chatting with them. And it's like, it totally drops back to like college buddy terms. And it's like the face you put on in hospitality can be so different than, not to say your true personality, but it's just a very different face. I was noticing it this morning. Like, you'll change your tone depending who you're talking to, right? I'm a big guy. I'm around 6'4". I recognize that for certain people, I can have a threatening appearance.
Humble brag.
Well, no one's ever measured me. And the number keeps going up. But I recognize, like, I'm I've got a creepy mustache. So if I'm around like a young mom and her child, I could see her running away from me. And these two women were outside the coffee shop. I needed to ask them a question about something local. And I started engaging with them and talking to them. And at the end of the conversation, I realized that I had lifted my voice like 6 octaves up. And I was like, what a weird, unintentional way of trying to be less threatening. Is I'm talking like Kermit the Frog. I'm like, it's just the weird things we do sometimes without recognizing it. I'm going to bring this back to, like, it's a weird sales thing too, right? You're sort of like unintentionally selling yourself and trying to read the situation. And men tend to actually lift the pitch of their voice when talking to women if they don't want to come across as threatening. What a weird thing.
Man, there's so many things in there I want to pull on. One is, as usual, I couldn't sleep last night, so I was watching Sorry to Bother You. Have you seen that movie?
No,
but it's so funny. Like, if anybody's seen it, and any of the bougie crew is listening, like, or watching, you'll know what I'm talking about right away. But they like have like for their it's all telemarketing, and they do their white guy voice, and it's hilarious. Like, that's like the theme of like most of the movie. It's fascinating to watch.
I'm sorry to interrupt you, but I really that just hit me. Have you seen the AI that was going on? It's a startup that uses AI to real time transform voices of emerging market telemarketers into white person voices.
No, like in real time? No, I haven't seen
real
this one.
time. So the whole idea was like, you call a company and you might get kicked to a phone, responder in India. There is a large cohort of people who don't like that experience. They don't dealing with the accent. They might struggle with it. And so this was a software solution that would in real time make it sound like you're talking to a white person.
That's crazy. I saw, well, because what that reminded me of, I saw, and actually on my list today was actually talk about AI and chat GPT bots and everything. But one of them, there was a Twitter thread about, he was saying he had a client that wasn't exactly well educated, and he was doing like, I think it was like landscaping jobs or whatever. And he used the AI chat bots to help him put like his responses into like formal sentences. And he was getting much higher contracts because of that, because he lacked education or literacy. And it was just like a fascinating thing to like read through, like if that story is true. So it was really fascinating. But like the other one though, like you're saying, without even the raising your voice, the one that always reminds me, like on sales calls or whatever, is the nobody's ever seen the movie, but it's Away We Go with John Krasinski. But in it, he like does like insurance sales and stuff. And whenever they're like traveling around the country where they want to live and everything, but whenever he gets on these sales calls, he's always looking at his wife, Maya Rudolph, and they both have this look, because when he gets on the sales call, he goes, "Oh, you old so and so, how about those Jets last night? You owe me $50, buddy." And it's just like all like just like this stupid bullshit. Like you're saying, maybe raising your voice, but also it's like the whole like bro culture of like sports and everything like that. It's just like every time he does it, it's hilarious to me in the movie. But also we have some sartorial questions already flowing in. One was, did you have the pirate sweater on when you were talking to the ladies at the coffee shop?
I did not.
And
it's
then
too warm. This goes on purely for the show.
Well, 2 is all right, what are you flossing on your wrist? Because people were trying to spy whatever you got on your wrist right now.
Well, that'll just have to
You're,
be a guess
yeah,
for people.
exactly.
It's nothing super expensive.
But you, like you said, these sweaters are incredibly warm. But these two idiots, we both wore them in Cayman, and mine was trying to do a joke with you that I was never pull off correctly. But we wore them in 85-degree weather in
Well,
Cayman because
in my defense, I wore mine without anything under it out to dinner. It
so
worked
did I.
beautifully for the boat trip. I want to stick on this AI thing because I
Yeah,
had a really
please.
interesting dinner the other night with the CIO of a firm in town, a very large firm that he does a ton of coding for his business, and he was telling me he uses this software that I'd heard of, but for people who haven't heard of it, it's called Copilot. Now, Copilot plugs into your software development environment, and there has been so much open source software that has been written now that what Copilot does is as you start to write code, it tries to guess what you're writing and then pull a solution put together a solution using machine learning and artificial intelligence from the huge massive code bases that are out there in open source world. He was telling me for like JavaScript projects in particular that he has to work on, he only writes 10% of the code at this point. That he starts to write it and the rest of it just gets completely filled in by Copilot, and he just sort of makes sure it's correct. And he said it's getting to the point now where Copilot is fixing bugs that he's putting in because it's not matching up with other solutions it's found online. And you go, man, I thought coding was safe. Coding's not safe anymore.
Well, that's a good question for you. It's like I don't have anything fairly cogent to say about any of this stuff, honestly, and I haven't spent enough time on it. But when I think about coding, would you argue it's somewhere between open loop and closed loop, or now we're finding around like a closed loop system, especially if you're coding, like you're saying, is if a lot of it's open source, then it's already available and searchable. What I mean by open loop and closed loop is like it's really easy for AI to figure out chess or Go. They're closed loop systems, right? The rules are known. Life in general is an open loop system, and that's why it really is hard for AI or any sort of computer intelligence to work on that. But I'm just curious how you view coding, like you're saying, if you're building kind of if you're rebuilding products that have already been built before, obviously you could use it. But if maybe you're trying to build an entirely new company with a totally new type of software, then it would be more difficult, or you could at least outsource parts of it.
I think that's right. I think if you are on the cutting edge or you really need something very unique and custom, right? If you're writing quant software that's trying to do high frequency trading or something like that, you're not going to find your solution out there in the world of open source. If you're trying to create yet another website, and you want it to run on, I don't know, Rails or Django on Python, there are so many solutions out there that are open source that you can probably just 90% of it can probably be automated. The question is how much oversight. How do you tell the AI what you want? It'll definitely get to the point where you will be able to write into one of those chatbots, I want a website that does XYZ. And as long as XYZ is generic enough, I want a shopping website with 6 products and the ability to add coupon codes. You will be able to say that, and it will be able to generate the whole website for you with the back end. And that's the important part. It's not just the front end, the back end as well that makes the whole system work with the database. It'll absolutely get to that point, and my guess is probably in the next 10 years.
Yeah, I was seeing like tweet threads today. They're basically saying that or showing that like some of that's already viable. And there's one I almost sent to Tyler because I know you'd love it. It was something to the effect of like any employee right now that's not using AI to automate 90% of their job and just collect a paycheck is like an idiot. But they're saying. But I also bring up the closed loop, open loop, and closed loop because I remember one of the tweets I saw right before we jumped on was something to the effect of like you said, you thought coding was safe, but then they were saying like algorithmic traders, it's not safe anymore. But I want to almost tie this into another thing that you were involved with tweet threads this week, though, is about there was a paper about improving trend following. And so even though you might have all the quant knowledge or you may be able to code algorithmically, sometimes we make a lot of mistakes, even in a closed loop system. And sometimes it's, human plus machine that really needs to think these things through. And so maybe you can kind of touch on, kind of what the paper is about, that tweet thread in general, talking about, creating new are you adding all these whiz bang things onto trend, and does it actually work?
Yeah. So before I go there, I think there was an interesting example of the chat bot that was really popular. People are talking about entering inputs and having it describe things. Doug Colkett on Twitter did a quick one where he asked it to explain black shoals. And 99% of the explanation was correct. But when it talked about the rate, interest rate that's embedded in the Black-Scholes equation, the chatbot said it was the real rate of return. And it's not. It's the nominal rate of return. And you would say, well, that's just a minor problem. But it sort of ties into the way this AI is learning, right? It's reading scraping all sorts of data. And it clearly, from like some node of economics talks about the real rate of return a ton, right? And so it probably was tying this into a broader field of math and math economics and all that sort of stuff. And so it felt like in describing R, it had to say the real rate of return was probably, from a probability weighted perspective, the right answer for the AI. And that's still where it requires, it's not perfect yet, right? And who knows whether it ever will be perfect. Humans by no means are perfect, right? But like you need that keen eye to go, that is 99% of the right answer, but that one thing that's wrong is importantly wrong. Like you should not get that wrong. You don't want to put the real interest rate in there. You need to put the nominal interest rate. So I thought it was a really interesting example of like understanding, having the awareness of like these machines are learning. It's machine learning, but it's like from the context it's trying to pull from, it can get tricked.
Yeah, it's
and
like
there's some.
we always go ahead. Sorry.
I was just to say there's some amazing papers out there about adversarial like examples to machine learning, where you machine learn on a data set, and then if you, especially with imagery, and then you use a very specially calibrated image of like a cat, and the machine learning will think it's a golf club, like because it's tricking the machine learning model. So it's like we can do some really impressive stuff, but we can also break our own really impressive stuff still.
Speaking of perfect, I jinxed us because your mic's crackling like crazy, at least for me. Tyler's shaking his head yes. So as always, like we messed it up. But like you're saying, that's why I was saying human plus machine, because it's like the things we talk about is like it's garbage in, garbage out. So if in your data set, it's just like the last 30, 40 years of stock bond correlations, like you may have a problem, or what we saw in the GFC is, if you say, housing can't have a negative return, then that's the problem too. So that's why you need kind of the oversight to like what information is getting fed into the models. But then we were starting to extend it into like, hopefully I give you time to fix your mic there and hopefully it's working okay. But like the paper on like improving trend models and trying to constantly maybe, and maybe part of it is, like you said, trying to reassess the data on a shorter look back, with not the proper way of assessing, what's happened over the last 5 to 10 years.
Yeah, so hopefully my mic is no
Better.
longer crackling.
Yep.
Oh, good.
Yep.
I just gotta pray it doesn't break again. This is what happens when you travel too much with your mic, I guess. Yeah, there was a great paper by an author, last name Zakamulin, who's written some really great stuff on trend. That basically said, look, trends don't, like when you do trend following, you're typically looking in all the academic papers over a fixed horizon of time. So what does that mean? I might look at a 200-day moving average, and if the price is above the 200-day moving average, I might buy. If price is below, I might sell or short sell, and that would be a very basic trend following model. When the trend is up, buy. When the trend is down, sell. And what Zakamulin was saying was, look, trends aren't always of a continuous length. In some market environments, they're short term. In other market environments, they're long term. And really what we want to have is a dynamic trend following system. And so he built this regime switching model in a fairly innovative way. He trained it on history, and then he used it to identify basically the trend speeds that would work. And then he proved that those trend speeds ended up working better. And it was one of these examples of like, like it's an innovative concept, but you trained on and tested on in-sample data. Like you didn't really withhold anything as being truly out of sample to test whether it was a better model. Adam Butler had a great response saying this is where we can learn a lot from machine learning, where it uses these k-fold innovations to create in-sample and out-of-sample robustness checks, and that this concept, like not being careful about your in-sample versus out-of-sample when you're doing these innovations, is all too prevalent in academic literature. And this is why a lot of this stuff falls apart in the real world, because you're basically proving your own thesis when you say I'm developing a model that's going to find the best answer on this data, and then, oh, by the way, it found the best answer. Well, no shit, you had a crystal ball, you know? So
when you rig the game, it's amazing how you can win the game. There's so many things in there, like what we're saying even in the beginning too, is like, it always fascinates me how people always jump to like this dystopian view of then like broad AI, or I'm forgetting the right word. Because sorry, go ahead. You want to
no,
jump that?
I just like, I love your phrase closed loop. The world is open loop.
Yeah.
Data from the past is closed loop.
Yeah.
You know, like, and we think of that data from the past as being reflective of the open loop of the world, and it's not,
No,
right?
that's perfect. And not only that, and then we have non-stationarity, which we know I've loved from before, but also that to highlight that basically, if I have to sum up my life philosophy down to 2 words, it's open loops. And that our brain can only understand things in closed loops, yet the world we live in is open loops and is permeable around the fringes. So everything we have is probabilistic guesses, and there's always something that can upset that. So that's right. That's why open loops is the way to think about it. But I was saying about the AI is like everybody jumps to like this dystopian view when it's, to me, it's clear like these are tools, and the humans plus AI or all of these tools just make us better practitioners in any space, because they're like, oh, there goes traders, there goes doctors, there goes writers, there goes musicians, there goes everybody. It's like, no, these are just tools. Like, we're going to get better. It's going to make us better, and jobs are going to change and evolve, and we'll adapt to the times, and then we'll just get better using these tools. Sorry, do you have anything like that before I wanted to kind of move
Yeah,
on from that?
no. What I would say is I find that ironically conflicting with things you've said in the past about 3% of us farm, 3% of us in the military, and the other 94% of us are
It's
just entertaining each other. So who really
yeah,
gives a shit anyway? You
yeah.
know,
This is a new form of
automate away all
entertainment.
the jobs,
It's
create universal basic income, and let's just chill, man.
Man, unfortunately, we figured out I have intellectual dyslexia, but I think I'm still consistent along this thread that we're still just entertaining each other, but now we're getting more sophisticated tools for entertaining each other. That's
Got
what
it.
that would be my retort for
Yeah,
that.
look, I would argue market competition would make it so that, you know, these tools will be pushed to their limits in a way that the market, I'm going to use air quotes here, wants,
Yeah.
right? That people will continue to innovate and push boundaries with these tools, um, in hopefully positive economic ways.
And then hopefully you're not missing my not too subtle segues in all this, but I was talking about improving trend, because we have to talk about trend here at the end of the month, where trend finally got smoked in November.
That it did.
But let's put it in context, though. That's the other thing, is like, once again, like we always talk about, is like, now what are all the pundits going to say? Trend is dead. That everybody's going to run away from trend now, where it's just had a pull. It could be a pullback, could be dead. We don't know, but it's going to be interesting to see now everybody come out of the woodwork. And a lot of across the board, we've seen anywhere from mid single digits to high double digits on pullbacks or drawdowns, from peak to trough drawdowns and different trend following strategies. And for the most part, about 2/3 of it was FX, so it's really just a reversal of the strong dollar trade, and then about another third was rates or bonds, however you want to call it, and that's seeing the reversal of some of those trades as well. And there's some other stuff with metals and stuff around the fringes, but it's just interesting when you have these peak to trough pullbacks, and you and I've been talking about on this show many times. We've aggregated down to these trades, and whenever you're long in the tooth on their trend, these inevitable pullbacks happen.
Yeah, and it seems obvious in hindsight, but again, I would have said, well, these trends seem long in the tooth, last March,
Yeah,
and
yeah.
they continued, and there was a bit of a pullback, and then they continued. So you just don't know how long the trends stretch, and that's why it's got that big skew to it. So yeah, it was a tough month for trend following, a phenomenal month for equities. I mean, the Dow Jones is like less than 5% from being positive on the year. It is insane. Now, NASDAQ, totally different picture, but like, if you ask me, if you like, and look, I pay attention to markets, so I generally know
You
how.
pay attention to them?
I know, I do. I know you don't, but I generally, like, at least I know ballpark where the S&P is within a couple of percentage points on for the year. But like, if you had said the Dow Jones the other day was 3% away from being
Right,
positive on the year, I would have laughed in your face.
right.
I said, no way, 10 or 12. No, 3%.
Yeah.
What a
That's
huge wedge between equities this year with NASDAQ, Dow Jones. Like, it's just showing the totally different demand that's happening within cross-sectionally within equities.
And doing like a callback to the beginning of our podcast, this show where we're talking about compliance again, is I'm trying to think of what I can and can't say. Is like a lot of friends of ours have combined equities and trend, and like you just said, equities absolutely ripped this month while trend was having a drawdown. And so once again, the pairing or what's a word I could use? I'll use quote unquote stacking of such things would have been a really interesting product this month.
Yeah, for sure. I mean, I think someone, and I haven't confirmed this, but I think someone said and I hate to quote the Dow Jones. I feel like a real boomer here.
No, it's how old are you?
Right. But I think I'm going to start quoting it in points, just make it meaningless for everyone. I think the Dow Jones was up like 20% since its low, which is kind of wild. I don't like to define bull and bear markets. And certainly you've seen this sort of pullback happen in bear markets before, but it has caused a lot of trend followers to jump back in the pool. Goldman Sachs, I saw the other day, estimated that about 150 billion of CTA flow went back in to long equities, which is an insane amount of capital over the last 6 weeks. I'm seeing it in my trend signals that a whole bunch of short-term trends have turned on. So you would expect end of month trend followers from like Meb Faber's famous paper, all the 10-month moving average ones turn back on. So you could see a bunch of people jumping in the pool here. Whether they get whipsawed, we'll find out.
Well, a lot of the podcasts I listen to are capital allocators or large institutional funds, or what we call real money. It's interesting that they're now assessing whether they should be including or adding to trend following. And as you know, these are large cargo ships that move very, very, very slowly.
Well, it's telling to me. AQR wrote a paper the other day. They've been heavy on writing white papers on trend following, but one of the papers they wrote the other day was specifically addressing, does trend? Does trend mean revert? Right? If you have a good year in trend following, does that tell you anything about the subsequent year? Which is funny because I actually was writing a very similar piece before they published theirs, because that's a question I keep getting from potential allocators who go, you did well this year because of trend following, but if I allocate to you, or am I getting in at the top? And their paper basically said, no, this is all like as you would expect in a fairly efficient market. It's random noise. It doesn't have a huge amount of predictability. I actually did find that trends do trend. They tend to persist a little bit. So if you buy trend following, tends to have multiple good years in a row, but it's not very strong on the statistical significance scale.
Got it. And now we're gonna kind of segue to Daniel's question, is that as we're talking about products here, and we always talk about building products or combining products or stacking products, etc. As we know, one of my favorite products historically is Harry Brown's permanent portfolio, also known as PP. But I think we need to start talking about PPs. So you've had quite some big news in PP land this
Really
week.
doing this to me, huh?
So what? I'm really setting you up. I'm letting you get a drink of your coffee before I make you spit it out. Well, I'm gonna see if I get another PP in there. So like, what were you putting in our chat about your PP or long PPs or something like that?
God, so everyone's favorite financial YouTuber, Meet Kevin Paffrath, has launched his own ETF. For those of you who don't know who Meet Kevin is a how would I even try to describe him? He's a young real estate agent and I don't know, real estate mogul. Flipper. Yeah, I mean, just he was your classic. I'm going to go on YouTube and talk about real estate and how you too can learn how to buy homes, fix them up, and sell them for profit during the 2010 to 2020 cycle. He then made some very well-timed trades, to his credit, both in his life as well as his personal portfolio. March 2020, he took a ton of money out of his houses and went super long Tesla, made himself a fortune, and then used that to continue to promote how much of a genius stock picker he was. Sold a shit ton of courses. Dude has done incredibly well for himself. Had a failed attempt to run for, was it governor of California? I don't know. That was an interesting
governor. Yeah.
And has since decided to launch an ETF that just went live the other day. He proudly put $1 million of his own dollars in it. And what blows me away the most here is not that he decided to call it PP, which supposedly stands for purchasing power, but the URL is longpp.com, and it's like Meet Kevin's PP, and it's just like very juvenile, which I'm sure works for his audience maybe. But what's weird to me is he has operated outside of the sphere of regulation from the SEC. And now suddenly he is CEO of an LLC that is sub-advisor to this ETF, and he is going to be registered with the SEC. And he's going to be under SEC purview. And to me, as someone who has made, he is someone who's made a fortune on YouTube saying whatever he wants. You know, now all of a sudden you got to watch what you say. And I think it's going to make him a lot less interesting.
Well, speaking of which, though, did you double check? Because there was that, I want to use the right word, workaround. If you're the index provider or whatever, like you can market. No, he's actively involved as a sub-advisor, so he will register.
Opinion, is it says yes, it is an actively managed ETF, and it says Mr. Paffrath reviews thousands of securities a year, and like, right, those are I don't want to say promissory statements, but if the ETF underperforms and someone were to sue him and prove that he wasn't reviewing thousands of tickers a year, right? Like, you're writing this in a fund prospectus. And that is held to a very high standard by the SEC. You have to do what you say you're going to do. And by the way, most firms who are regulated document that they did what they said they were going to do, just so when the SEC comes a knocking, they can prove it. And it blows me away that he would be willing to bear the regulatory risk on this. Honestly, he's making a lot of money on YouTube. For him to even come close to scratching the income he has from YouTube, that ETF is going to have to get really, really big.
Yeah, like for those that don't know, he was making minimum like $5 million a year on YouTube alone, pumping out content every day. Like, he's prolific on the content side. And I think at one point his portfolio was over $50 million was what he was bragging about, his stock portfolio.
Yeah, I definitely know it got north of 20, at least. So this, who knows whether it's legit, you know? Again, he's doing
well, exactly. Well, part of that, yeah. But that's why, I remember we were privately talking about it. It's almost like this is like that Silicon Valley episode of like, don't ever show revenue because then they can value what you're worth. And it's like, why would you ever, like you said, be registered and everything when you could just spout off on YouTube whenever you want, make plenty of money on YouTube. And then now, not only do you have to be registered, but now you're going to have to show a track record. And then that might kill your ability to bring in a crowd on YouTube. Well, I guess a lot of people have had a terrible track record and still managed to bring in a large crowd on YouTube.
But the allure of YouTube is to talk about the one trade you made and like all that sort of stuff. And now he's going to be held to the performance of his ETF. We'll see. I think people massively overestimate the quote unquote optionality of running an ETF and being like, I have this massive YouTube crowd. If they just all put in $10, that would be $10 million. Great. That's not an interesting ETF. You need that to be hundreds of millions for it to be an interesting ETF from a business.
As we've always had to explain to family and friends what BIPs are as far as our income on these sorts of things. So like, if you don't have a clear path to raising billions of dollars in an ETF, you're talking like single digit BIPs, you're probably going to end up netting. And so like, yeah, if you don't like, it's like the idea of like, I'm a great home cook, so I should create a restaurant. No, like this is not a good idea. But especially this juvenile humor thread, I think it's becoming more and more prevalent. Like, I was texting you the other day, is like, Tim Ferriss just launched his NFT project called The Legends of Cock Punch. And part of the podcast when he was launching with Kevin Rose is he was talking about, if anybody, wants to write about it disparagingly for like the New York Times or everything, he thinks it's hilarious that they're going to have to say cock punch. And same thing with like Kevin's pee-pee. Is like, do you really think that's going to indemnify you from like fraud or not like fraud? Like, neither of them are doing fraud, but like, is that going to indemnify you from anybody going back at you in hindsight or any lawsuits? Because you can say, well, I was obviously juvenile. I called it PP or cock punch. So why did you ever take it seriously? And as you and I know, like, the SEC doesn't care. They take this very seriously.
Yeah, but that's worked for Elon Musk.
Yeah, exactly.
Right. And I think Kevin is following the Elon Musk playbook on this. And he's like, all press is good press. I'm going to do something ridiculous. I'm going to have it. And look, by the way, I should mention, like, tickers are weirdly important, right? You would think it's just a ticker. Who cares? Tickers, like, when you have a good ticker, people love it. People talk about it. It gets you more press. Like, tickers are important. And he talks about it being the purchasing power portfolio. Great. PP, purchasing power. It's the leaning into the juvenile association that to me is like, look, I'm not saying we're two dudes in pirate sweaters talking that work in this industry. We clearly are not like everything
Not
needs to be
mature.
buttoned up.
Yeah.
We're clearly not mature, but I do have a weird line in the sand that I'm like, I'm also not a 7-year-old anymore. Like, this isn't that funny.
Well, it's almost like I was saying with the away we go reference of like getting on the phone. Oh, you old so and so, you owe me money. You and I were talking about this before. Is like how we can't stand bro culture a lot of times, and you just feel like you get dragged into it a lot of times whenever you're in a group of males. Especially, I hate generational things, but my Gen X, like we don't know. We were talking about this privately. Is like we don't know how to show emotions, so we usually do it by like making fun of each other. That's the way we show emotions. But that's like part of like that Gen X bro culture. That's like, come on, guys, how old are we now? Like it's okay to say like you like my sweater or my shorts or like that we're friends. It's okay. It's okay. I mean, now we all just need a hug. But part of that. So I wonder though, on a serious note, on Tim Ferriss NFT Legend of Cock Punch, I'm wondering what you think about though the counter cyclicality of maybe launching an NFT in like the bottom of the market. Like Tim's kind of known for more of these things. Like he's willing to go against the grain. You and I think that from a just pure business construction standpoint, the NFT offers a lot of interesting things with programmable money, token gated economics. It's a much better version of LLC, so to speak, or even in a securitized token. But like, what do you think about like launching into this environment?
Yeah, I mean, you don't know whether it's a good environment or not until 3 years from now, right? If he's bottom ticked it, great. If this is a crypto winter and you can't get people back in for another 3 years, it's tough, right? But I guess I can't imagine there's a ton of carrying cost associated with it, right? And it's a question of whether he can use his own audience to make it isolated successful. And I'm questioning, what does success mean? Like, does he need it to be trading like hotcakes to be a successful product for him, or was it just something that it's going to allow? There's going to be utility associated with events and that sort of stuff, and it allows him to move into the blockchain space. I don't know. Everyone measures success in their own way.
By the way, while I start talking again, your mic's popcorning again. So whatever you did last time, that'd be great if you could try it again. But so to your point, like he actually, as he does with everything, he put a lot of forethought into it and everything, and they've created this entire like world building, fictitious world around it, and all of these different dynamics, and all of the amount of effort they put into every one of the roosters and their attributes, and they put a lot into it, and they also have like 3D graphics around it and everything. And it's like, so I think for it to continue and to take on a storyline of its own, I think it does need to be economically viable instead of him coming out of pocket for everything like he has been for like the last year. And so that's part of it. But what was also maybe interesting from your perspective on this, if you've seen more of this, is one of the things him and Kevin Rhodes were talking about was they no longer have like the royalty economics. Like, a year ago when Kevin's launching Moonbirds and everything, you're getting all these royalty economics where like you might only make, 20 million off the mint, but you're making 200 million off the flips in like the first 6 months off the royalties. And so they're both talking about how the royalties died. And then one thing they were talking about that you might know more than I would on this is like, they're saying now there's all these like pushbacks to royalties, and people don't want to buy or mint things with royalties, and like nobody wants anybody to get paid, and people are trying to find workarounds to not pay royalties. And I thought that was fascinating that you don't want the original IP creators to have any royalties.
Yeah, I went from this conversation of NFTs are great because they allow the creator to make money in perpetuity, right? Not just on the initial sale, but in later sales, to all of a sudden, like weirdly a few months ago, there started to come out with marketplaces that allowed you to do sales without paying the royalty, right? Because it's all just programmable. And then there was like a weird split in the world of NFTs of people who are pro-royalty, anti-royalty. Would we support royalties on our platform? Would we give you the choice? I think what happens is when money becomes precious to people, they stop feeling so generous, right? When you can flip things, when I can buy something in the morning and it goes up 300% in the afternoon, what do I care about a 5% royalty? But when it's losing money every single day and I'm trying to exit, that 5% royalty all of a sudden feels pretty important to me. I think it's funny. So living where I'm living now and trying to start tracking real estate around here, I can't help but think of like NFTs are like a weird, like if I were interested in learning about trading real estate, flipping real estate, like I feel like I'd play in the world of NFTs, right? Because they can go from like hyper liquid, you can trade them in a day, you're trying to like, there's weird like idiosyncratic risk, but if you're in the right project, the whole space does well. It's sort of like, okay, if you're in an area that's hot, you can do well, but if you happen to buy the right property, it's even better. There's a spectrum of properties. You can buy the wrong property and it's not flippable, but then it can become totally illiquid. I don't know. It's sort of this like interesting like dynamic, because I often think to myself, like, the world of crypto is kind of great in the sense for young people who are interested in finance that want to be able to try things. Like, if you just want to try writing a high frequency market making bot, possible in crypto, not possible in the world of traditional finance, right? Like, there's a lot of cool and interesting things that you can use crypto as a testing ground, as a sandbox that's actually live and there's money on the line. And I was thinking to myself, like, NFTs are like a weird, interesting way of like trying to think about like the world of real estate, not with the home involved necessarily, but from like a property perspective. It has a lot of the same features that, and it's purely digital.
Yeah, almost like you can, the way an NFT can be programmable is, especially on commercial real estate, like you can, everything's fungible. Like you can kind of make up any contract you want. And almost to your point, is like, I've tried to buy real estate in the past where I've told like the owner, like, here, I'll pay this price, but then I'll give you a percentage of anything above that if I sell it within the next 5 years. And so basically like programmable royalty on the back end. It's most people won't bite on that, but it's always an interesting way of trying to play that, because, you know, everybody's afraid of missing out on upside. So if you're trying to assuage that part of their guilt on the upside, you know, I've tried that before. But then part of it was, didn't you, I didn't ask you about this privately, didn't you post something on Twitter like where you're tracking one of the, was it one of the houses in your neighborhood that was like, if you like from 2019 to now is like tripled in price? Is
So
that
it
right?
wasn't even a house. So I live in an area where there's a lot of like small lots. So the house I'm renting right now is on less than a quarter acre. And I'm not used to that. Being from like central Massachusetts, I'm used to like houses are on big old farmland acreage. So it's like really weird to me to be in these like tight little acreage. And right up the street, there's a lot that's about 3/4 of an acre or something like that. And if you plot the price for it of using like a Redfin or something like that, it was like right pre-pandemic, it was probably like $800,000 estimate for the lot. And then all of a sudden, it just like is a straight line up to 1.8 million. And I'm thinking about it going like, all right, you've got this lot. It's not on the water. It's not like a particularly special lot. It only has street access on two sides. So I couldn't even divide this lot into 4 houses. Like maybe I could get 2 houses on here, but they'd be pretty weird houses. So you're talking about paying 1.8 million for a lot that if you tried to like replicate smaller houses on really wouldn't be feasible, and you couldn't even make your money back if you did that. If you put it into 3 lots, and each of the lots, you know, the houses around here are not going for any high number. They're like $450,000, $500,000 for the quarter acre lot plus a house. Like you're not even making back what you put into the property. So I don't know how someone is justifying this ask for this property, but it's like, it's what's the funniest part to me is not like people can ask whatever they want, but somehow the price estimate, you know, it's not like just this is what the ask is. Like all of a sudden the estimates agree with that ask on Redfin. And they're like, I'm like, how much of these estimates are just driven by what people are asking for, you know?
Well, it's supposed to be off of sales, but it never is, at least on those algorithmic estimators. But also, when we were actually walking around your neighborhood, I remember you and I were talking about is like, I think we've joked about this before on the show. Is like I've been around real estate my entire life. Like my family is involved in real estate. I was a commercial real estate developer and all these things. And after all of these decades in real estate, it's one thing I know: I can't predict real estate markets. You would think everybody thinks they're more easily predictable than the market, but I think everything's unpredictable. And it's like, you know, what we've talked about in the show before too is like how we've watched everything round trip. Like we showed all the meme and the tech stocks round trip to pre-COVID levels, you know, watches, cars, everything's just round tripping. The only thing that hasn't necessarily round tripped is real estate. And is that because it's on a lag effect? But I don't want to assume that, because there's a lot of, you could steel man both sides and there's all these demographics and everything else involved, but it's hard not to see like real estate round tripping, but that would be quite a big peak to trough drawdown from here still.
Yeah. I mean, you started to see rents turn around. You've started to see properties that are selling around me when I check are down, but it's only down like 5-10% from the peak. It's not the down 30 or 40 that would get us to a round trip.
Right.
And to your point, there are perhaps permanent changes both a demographic perspective as well as just a work culture perspective, you know, a perspective of like how COVID made people rethink the style of life they want to have. All of that may be a permanent structural shift in property valuations.
So I want to go back to our, talking about Meet Kevin YouTubers. We kind of had like actual a melding of all of our worlds in this one, and especially talking about Jejun naivete. Is shout out to Dimitri Kofinas on his Hidden Forces podcast. The homie Dimitri had on CoffeeZilla from YouTube. Did you
I
ever watch
saw that.
CoffeeZilla? Did
I've
you used to?
watched a bunch of
Yeah,
CoffeeZilla, and I saw that Dimitri had him on. I haven't listened to the episode yet.
yeah. I was just I finally got a chance to listen on this morning walk, and I was actually texting Dimitri like how dope it is that he had CoffeeZilla on. He apparently didn't know much about him, like one of his followers, but I'm watching on and off like CoffeeZilla's YouTube channel for years, and I don't want to talk about SBF, like in the sense that it's like just getting way too much ink these days. But I do thought there was an interesting thing that came up on the podcast that I feel like you and I've talked about before, but then nobody's really talking about anymore. That was really interesting because it's kind of fallen by the wayside. Is I can remember vividly, I mean, many conversations, but I think I was in Las Vegas airport. I don't think I was talking to you. I think I was talking to one of our other friends, but we were talking about Tether and the ideas around Tether and whether Tether is legit. And one of the biggest steelmans for how Tether could potentially be legit was that allegedly Alameda was taking off hundreds of millions off of Tether, and SBF was the largest proponent that Tether was a legit platform.
Yep.
And that's through all this, everything everybody's talking about. I totally forgot about that piece, and that was the only pushback of where Tether could have some legitimacy, was that they were allegedly moving those amount of coins up, and now we're like, wait, is that true? And
Well,
that was the steelman.
it's an interesting argument too, because it's like if I go to my bank and withdraw $20, does that mean my bank
Right.
is solvent? Like,
Right.
no, but it just means
Right.
I was able to get $20 out. Like if Alameda isn't doing a large enough volume relative to what Tether has on their balance sheet, it might not even matter. You don't really find where that breaking point is till there's a run on the bank. It is very concerning that Tether does not continue to provide any transparency into what they do, that they need like a top 7 accounting firm, that the top 4 won't touch them, right? Like there is no excuse for it at this point. And my view is they are absolutely a fraud of some sort. It's just a question of whether they can outrun the fraud falling apart to become straight, right? Like that's my view of it, that it is a house of cards that they're trying to get to the point of legitimacy and avoid the bank run. And can they get there before it does? That said, there's a lot of people who think that Tether falling apart would take down the crypto system. I actually think there's an interesting counter argument. I think it largely depends on how the crypto system is positioned. Like if everyone's using Tether as collateral for being short right now and Tether collapsed, it would force people to cover their shorts, which would create a massive long scramble. Right. So I'm not sure it's like as easy instantaneously to say like Tether falls apart, all of crypto falls apart. It's certainly used as collateral in a lot of places. But if the net global aggregate position is actually short right now, then actually it might cause a massive long.
Speaking of that, though, like you and I kind of were starting to have this conversation a few weeks ago when we were in person together of like, what is the contagion effects? Are they contagion effects? Is this more like equity investments of the late 90s .com boom? But one of the ones that's coming up more prevalently now, maybe not so much even Tether, like you said, depending on the positioning, but have you thought much about like the grayscale, GBTC or DCG involved in like what actual collateral are they holding from FTX and everything, and how they've changed the tune pretty dramatically day to day. But like, does that concern you at all? I guess, and then part of that concern, everybody's worried about them dumping Bitcoins onto the market. But it's like, do we know how many Bitcoins they have?
Yeah, I honestly, it's really hard to figure out where the rest of the bodies are, right?
Yeah.
And I think a lot of times with this sort of stuff, it's like, how close are they to the edge, right? To that sort of like capitulation point where they have to declare bankruptcy. Are they able to avoid it? What happens if they do? Are they going to just dump Bitcoins in the market? Do they push? Do they redeem in kind? I'm not sure it's all that clear, right? And so, yeah, I think there's a reason there is continued fear in the market But surprisingly enough, I feel like for all the fear in the market, crypto has not sold off all that much in the last week or two, right? Like I would have expected it to be a lot more dramatic. And it says to me like, yeah, all the levered players have already washed out. In fact, I think the opposite happened. I think the other day you had a massive short unwind that happened in Ethereum because I think everyone's just gotten one-sided on this trade.
And like we've talked before, obviously not investment advice, but like we said, the resiliency, well, given what's going on, has been fascinating, at least for Bitcoin, Ethereum. By the way, right before we jumped on,
resilience here is being down 75% on the year. So,
well, before
let's
that,
be clear
after
what resilience means.
It front ran that what's been going on in the last few months. But also, right before we jumped on, did I see like another stablecoin on Binance went down, or they shut down the ability to trade the stablecoin on Binance? Did you see any of that before we jumped on? The other thing right before we jumped on is Tyler asked us if we want to talk about, you know, the way the different platforms are handling SBF, and I think we're seeing a lot of that, the arguments back and forth on Twitter. But like to me, like I said, like I'm almost like I saw like Jared Dillian post on Twitter, like, will just SBF get off my feed? It's kind of like how I feel about it. Like I don't have a real nuanced hot take or anything, but I'm just curious how you feel about if you have anything to talk about on that.
I have two thoughts. The first is it is very telling to me who are the tourist journalists. Right? Because the tourist journalists were writing about SBF and Caroline, and no one mentioned Sam Trabucco, who was the co-CEO up until about, I don't know, 3 months ago of Alameda. Right? And I talked about, I had him on my podcast. Like, if you're not mentioning him, it's either like you have a sexist agenda. And by the way, I do think there was a lot of tweets against Caroline that was part of a very sexist agenda. I don't mean agenda in like the, you know, preconceived manner, but I just think they were very sexist. But also, like, you're not aware. You don't have the full history of what's going on. And so therefore, I'm going to massively discount everything you say because you're doing catch-up journalism. This is the hot topic. You're trying to catch up as quickly as possible, and you don't have the background or history to fully grasp the situation. So yeah, I'm just going to massively discount everything you have to say. As far as SBF goes, look, I mean, he's getting the platforms because people are interested. I will say, I do think there is something to this day and age in controlling the narrative. I've said it in the past. I will say it again. If you don't control the narrative, someone else sets the narrative. So here's a perfect example. Let's bring it back to Meet Kevin. Meet Kevin made a shitload of money talking about FTX. Every time he said the word FTX, I think he made $2,500, right? And so he made money from FTX promotions and YouTube. So what did he do? He knew all of a sudden people were turning against promoters of FTX. So what did he do? He decided to start an FTX relief fund that he was going to spearhead, that he was going to take all the money he made and put in and try to give it to people who had lost money in FTX. Now, it sort of backfired on him because I think it comes off as like, ooh, look at me, I'm the center of attention, sort of slimy. But I will give him credit in the sense that he decided to capture the narrative. Right? He turned around and said, I'm controlling this. Yes, I did make money from this. I feel bad. I was duped. I'm giving you all the money. And in fact, I'm doing this great thing. I'm creating a relief fund. And I encourage every other influencer to do the same. Right? Controlling the narrative. If I were SBF's lawyer, I'd tell him to shut the fuck up. Right? But yeah, in a weird way, he's trying to control the narrative where otherwise the narrative is going to be put around him. And you can tell, by the way, when you just look at like people writing about him, look at the picture they use. You can tell 100% what the article is going to say and what the general media tone is. 2 weeks ago, all the pictures turned really ugly. It was him in bad light, looking frumpy, worse pictures. And then all of a sudden he's got his media blitz and the pictures have gotten better. Like the public tone, as you know, in the mainstream media has turned semi-positive, right? And so do I think he deserves it? I don't know, probably not, right? But to his credit, I think he understands the marketing game, like control the narrative.
We're not in control. Like if you just put out some semi-cogent, rational seeds of doubt, then people can play off of those. And that's what he's trying to do, right? Like he's trying to seed, like for the people that want to be empathetic or sympathetic to him and think that it is like, once again, this idea of, oh, I'm just naive and I'm just a kid. Like we were saying, whether, you know, the SEC doesn't really look at it that way.
I wish I had regulators. That would have really helped me.
Yeah, those sorts of things. But also part of it, and I'm glad you brought back up, meet Kevin getting in front of it. But like, I haven't followed it closely. But do you know if all of the rest of his Millennium Money crew did they end up? We know they took down any of their content that had FTX on it as sponsors, but did any of them address it publicly, like you said, and control the narrative?
I don't know. I've been so
Yeah,
busy with my own life. I can't spend all day tracking financial influencers on YouTube.
yeah,
But yeah, it was. I mean, like, look at someone like Pomp, right?
yeah, yeah,
Clearly has been a massive promoter in this space. He is trying to control his narrative, and I'm going to say to his credit, I know a lot of people don't like him. I think he's a master at it. I think Pomp objectively is a brilliant marketer. He knows what he's doing. Do I think it's nefarious? There's some nefarious aspects to it. I think when you know how good you are at this stuff and you're using it for your own self-promotion, like we've talked about that sales stuff in the past, I find it a little gross. But he is a brilliant marketer. There's a reason he's created his own little marketing media empire. But I think people can only take so much, and I think the crowd has started to turn against him, and him trying to control the narrative isn't working. But you do see it with people who are influencers who really understand marketing and branding, like grabbing a hold of the narrative before it gets away from you and letting other people set it. Like, you have to control it.
yeah. By the way, you're starting to popcorn a little bit again. So I'll start changing the subjects. But to your point, I should have sent you the Ikigai letter came out like yesterday or whatever to like client. I mean, they've been calling clients and everything, but it was like their mea culpa letter. Man, that must have been brutal to write. I should send it to you. Like it is, and it's long, and like you said, trying to get in front of it and apologize and mea culpa and like try to say, like I was wrong. Those sorts of things is like where most people are trying to skirt the issue or blame others or any. That's and it's understandable sometimes
Careful
too
with
for the
that in
people.
finance, right?
Yeah,
Because you can get sued, and if you're writing a
right.
mea culpa, then you're admitting you're wrong.
Yeah, and that's so it's always you never know what the people's lawyers are saying or getting whispering in their ear. Before I forget though, we usually, surprisingly, we save this to the end. Is we forgot to talk about last time. I ended up stopping by your house so we could taste our rum samples. So
Yes.
we did a bit of a rum tasting. So to keep everybody abreast of the Pirates rum situation or the Booty Crew rum or whatever we want to call it, is I'd sourced all these samples. We'd give them tasting notes and everything. So we basically had two sets just to kind of give a rough idea. One was we had all of these single estates from Jamaica that were all anywhere from 18 to 25 years old. That had been stored in small casks and everything, all single estate, very interesting rums. We had about 5 of those. And then we had another 5 rums that were anywhere from 3 to 8 years aged, from anywhere from 3 to 5 countries, different styles, different everything, trying to figure out what a blend would be in that like kind of newer to mid age range
Was it
tier.
really only 10 rums? I feel like we tasted like 20 rums. Was it
I think
really
it was
only
5 and
10?
6. I think it was 5 and
Oh,
6. So 5 of the aged and then like 6 of the 3 to 8 year blends, but 5 of the like single estate. And then maybe I'll stop there and I'll let you, if you want to jump in and kind of give your general overview of the tasting before like I can stop talking as always.
no, 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 no. I mean, my view is I came in with some biases. People typically think older is better, and I think that's not true with rum, actually.
Yep.
I
That's what
think
we found out.
Yeah, I think anything over 15 years is actually a waste when it comes to rum. It basically just turns into scotch, which surprises people who have never had really old rum, but I think it loses a lot of the rum flavor profile, takes on a lot more of the barrel profile, and it just loses that rum aspect of it. And so in my opinion, at that point, just go buy scotch. Like, it's just
Yeah.
not, there's nothing better about a 25-year-old aged rum that I've ever found. 15
And
sort of is like the max I like to go.
And shout out to PJ Pierre, even though we kind of jinxed us on that. Before we tasted him when we were hanging out with him, he said, I don't like old rums because they end up tasting like scotch. And then like we were doing blind tasting notes and then sharing the notes after each one. And pretty much all of those single estate Jamaicans, we were like, it tastes like a peat scotch,
Yeah,
is basically
you're
what it came
absolutely
down
right.
to.
The younger stuff had tons of flavor all over the place. Some like very funky banana stuff, some caramel, burnt tires. Like, it was all over the place, in good and bad ways. I would say I think there was one that we all agreed was the best. I don't remember what that was. I think it was like a 5-year or 5 to 8, something like that blend. but we weren't particularly blown away. Like I went and got a nicer bottle of rum afterwards, and I said, let's drink this versus the nicer bottle of rum. Not only was the color much more diluted, but the flavor profile was much more diluted. And color we should be careful with, because there are additives, right? There are, like, companies will add color to a rum after it's come out of the cask to make it appear more caramel, and that can change your perception of taste. The visuals absolutely can. But I think we all felt like the taste profile, it was good. And then when we compared it to like a Zafra, which isn't even
Zafra, wasn't it? Yeah,
which isn't even that great a rum, we were just sort of underwhelmed with the profile.
Yeah, no, that's what I'm glad you brought that, because I was gonna bring up about color. A lot of them are just, additives on color. And like you said, when you brought out that Zafra, which is mid-range, like, we thought there was one we kind of liked, but we didn't love. And then as soon as you brought out that Zafra, we're like, well, no. It's so, unfortunately, we're back to the drawing board. But I don't, hey, that's not really unfortunate. I guess we get to taste more rum. We get to go back to the drawing board as far as like figuring out tasting profiles, blends, countries, pot, column stills. Like, it's just been a learning experience for us. And I'm glad we at least got to finally try them together.
And in the meantime, there's been some interesting action in the rum world, right?
Yes.
So you had Diplomatico was bought, and Cruzan was just bought, right?
Yeah. By the way, do you pronounce it Cruzan or Cruzin, or I don't even know how you pronounce it?
I don't know.
No. So basically,
this is the I learned by reading it, and I have no idea how to actually pronounce
exactly. it. As I always like to say, I mispronounce words like somebody who read a lot, whose parents didn't read a lot. Like how I was able to shit on my parents on that one. But the Foreman Brown, but Diplomatico, and then it's not that Cruzan or Cruzin is sold. It's that allegedly the rumor is Beam Suntory may be looking to offload a few other brands, and that's one of them.
I thought they had bought them. No, okay, I misread that.
No, it's that in one of their vodka brands. I can't remember which vodka brand, but they're looking to potentially offload them. But they had acquired that, where Beam had acquired it through a merger with Pernod Ricot in 2008, and then Suntory merged with Beam in 2012. And it's like, so it's like, it's almost like finance, right? The new person in that seat wants to get rid of the old brands, or wants to put their own fingerprint or stamps on things. So I think it's one of those. It's like a latency brand. But if you look at it, Cruzan has or Cruzan has 5 generations of family history. It's one of the largest producers in the world out of St. Croix. They have a full blend, like multiple different bottlings, different brands, different labels. They do private labeling. So it's actually quite an interesting brand that maybe we should look into.
They make one of my favorite lower end rums, actually. It's their Cruzan Blackstrap. And the interesting thing about rum is, like, typically snobs of any sort of alcoholic beverage tend to only go at the high end. But if you're like mixing and making cocktails, sometimes the lower end stuff can actually taste better, because you don't lose the subtle flavor profile. So I was at a bar here in town the other day. They do tremendous cocktails, and I'm starting to see old-fashioned daiquiris more and more.
Nice.
Daiquiris are not like your strawberry frozen daiquiri thing. It's basically simple syrup, lime, and rum, and that's like your old-fashioned daiquiri. They make a phenomenal old-fashioned daiquiri. They asked me what kind of rum I wanted, and the bartender said, I will tell you, I actually think it tastes best with Bacardi. Now, Bacardi is the original rum that was used in old-fashioned daiquiris, but the Bacardi we drink today is not the Bacardi of Cuba, when Hemingway was drinking daiquiris.
Right.
Like, it is just not the same. And I was like, oh, Bacardi, really? And I had one or two with a little bit of a nicer rum, and he said, I think it's the best. And I had it, and I was like, I was blown away that, like, the lime masked the part of Bacardi I don't like, but the rest of the flavor profile was strong enough to come through. And sometimes those lower end rums are actually like way better for the tiki cocktails and all the mixed drinks.
Yeah, there's so many things I could go off about that, but I don't even know where to start. But again, I think originally the tiki drinks were the Indonesian araks, or however you pronounce that, right? Were actually the original tiki cocktails, if we want to even go back farther. But like you said, it really depends, and a good bartender will know. But more importantly, I want to point out what you just said is, like, a classic daiquiri is arguably my favorite cocktail, one of the best cocktails ever made. But it's simple, yet very difficult to do well. It's one of those simple but hard things, right? Like, it's just 3 ingredients, but if any of those are off, the balance is like perfect. And when you get it in a coupe, and you get like the little bit of that chill, oh, it's such a perfect drink. I could just, and we need to go have one now.
It's a good thing we stayed on the finance content. Everyone, this has been the Pirates of Finance. We appreciate you joining us. We did it today at the actual live time. We're shocked we got through. Technical errors, no camera glitches. I paid attention. I know you made a bet with me beforehand. I won that bet. I made it up in mic glitches, though. So I appreciate all of you sticking with us. Again, this is not financial advice, just two guys hanging out on a Friday afternoon. Thank you for joining us. Shout out to the world famous Booty Crew for joining us in the comments. We appreciate your time. Have a wonderful weekend, and we'll see you next week.